What's up, everybody? Chris over here, founder of PollinAteTrading.com, and we are on lesson 2 of the prop trading course. Today's lesson, we're going to be talking about systems trading and why you need a system in order to succeed trading, but mostly in prop. Here's the disclaimer. Let's always disclaimer. These are all opinions, and past performance is not indicative of future results. All right. So the prop trading course is free. Like it's for you. It's free. I'm not charging anything for the course. I want traders to pass prop tryouts. I want you to get funded. I want you to stay funded. And I want you to take every opportunity you can to make this amazing opportunity that these firms are offering to us. I want you to really seize that, go after it, really go take full advantage. All I ask for this is to like the video, subscribe to the channel, and if you know another trader who might be having a problem or needs to hear this, please send it on them. All right, let's get going. So in the first video of the course, we talked about why you would want to prop trade. Quick summary is size. Individual traders just, oftentimes are underfunded. For example, if you make 20% per year on a $5,000 account, that's like grocery money, right? But $1,000. If you made 20% a year on $5 million, now you're talking real money, right? It's $1 million. And 20% is, to do that over periods of time is challenging. But doing that as an individual trader, 20% a year is really not that hard. And so getting the funding you need to be successful, instead of trying to go for the big home runs all the time, you can do it slow and methodical. And with the large amounts of capital available, you can make some life-changing money. Okay, so have you attempted numerous challenges, tryouts, combines, and failed? Have you got funded, then lost the account on a prop firm at a prop firm? Have you passed a challenge, got funded, made money in the account, but broke a gotcha rule and lost all the account closed? And by the way, those profits are not yours. Have you ran up profits and then trail stopped out at break even, realizing no loss on a single trade, but lost your account, intraday drawdown rule? Or have you just blown up the account after going on tilt? The usual, I will get you back and I will prove to the market I am smart. If you've done any of that, that's what we're focusing on. That's what we're going to change for you. We're going to get you into that prop trading superstar that you are. So the first thing about this whole prop trading business is passing a tryout shouldn't be luck. If you've lucked your way into passing a tryout, it wasn't predictable, repeatable skill. It was, I just had a big day and I caught it and boom, it was luck. All right. And the thing is now you're going to have to rely on the luck to staying funded, not breaking a rule, not losing money. And then getting paid out, you have to rely on luck for that. So you're relying on luck all along the way to solve that problem for you, right? But passing a prop tryout won't change anything. You still have to have the skill, right? You can call yourself a hedge fund manager, the president of the stock market, or a prop trader. If you can't trade, there's nothing magical on the other side if you do pass a prop tryout. So we need to turn it from luck into skill. And the good news is passing and trading successfully, there's a formula. It doesn't require superhuman knowledge of insider trading secrets or Rain Man ability to look at patterns and extrapolate them into billions of dollars in 3 seconds. It's just a simple formula. You have your goal. What is your average trade in dollars? Like, how much do you return? And then how many trades do you need to make to hit that goal? So let's take a look at an example here. Do you know how long it'll take for you to pass the prop tryout? Let's say it's an Apex trader funding one, $150,000 account. People are liking Apex these days. So profit target's $9,000 on that. Your stop loss is $5,000. Those are the biggest parts that you need to know. Also, you can't hold positions overnight, so you got to close them before the end of the trading day. And I think their algorithms close it for you anyway. And then most important with Apex is don't break that intraday drawdown rule. So don't run up a big win and then let it drop back down and take you out. So in order to know in order to solve for that formula, you're going to need to know some key statistics: average win, average loss, max consecutive losses. We won't touch on expectancy. What's your win rate and what's the average trade? We're not getting into anything fancy on statistics in this video. So for example, if your average win was $500, your average loss $250, max consecutive loss is 7, win rate 50%, average trade $250, it would take 36 trades for you to hit that $9,000 profit target. And the real professionals know these numbers. If you don't know these numbers, guess what? That's what a system will help you get. Some traders are discretionary traders and they don't have a detailed strategy, but they've been trading for so many years that they actually know these numbers based on their results. But we're going to focus on doing it with a system, so you don't have to discretionarily trade for a couple of years before you can start collecting good data. Okay, so why would you trade with a system? The first thing is there are predictable setups with a system. And by predictable, I mean, you can predict that you're going to have a setup. You're going to have a trade. Most of the time when it's doing this, this, and this, you're likely to have a trade. What does that mean? The other 90% of the time where there's not a potential setup, you don't have to be dialed into the market. So if you know that you only have to work when this specific thing's happening, you can spend your time working on other things. You go to the gym, you can read, you do all sorts of things that you, because you can predict that you have work to do. They're repeatable. The trade happens over and over and over and over. And that's what makes them useful. If you had a trade that happened every year or every 5 years, that's not very useful for a prop system, right? Because you're looking to make money every day. With a system, you can monitor your performance versus the model. So the system is your model. And if you ever veer off, if you ever start having a drawdown and questioning yourself, you can look at your system and say, okay, did I ever have drawdowns like this? I did. Oh, this is normal then. Okay, it's not broken. So I don't need to abandon. I can just keep going. With a system, you can identify mistakes and improve them. And also, because you're not focusing on every single tick in the market, you can start seeing other opportunities that are around your system or complementary to your system or separate, and you can stack those on top too. And with a system, you'll know your numbers, so you can do your magic formula and know how long it'll take. Now, with a system, you're going to have the ability to adjust the system to your target, right? If your target here is $9,000 profit without a $5,000 drawdown anytime along the way, adjust your system according to it. The important number here in prop is to focus on the $5,000 stop, not the $9,000 profit as much, right? Because if you can dial in that, never go into that drawdown area and just keep trading your system, even if you have drawdowns, as long as you don't make mistakes and you keep trading the system, it should just turn back up and then head to your target. So you should size your positions in a way that you would know that you would never hit that $5,000 drawdown. So your system has max 7 consecutive losers. Okay, so right now we have our system that makes $500 on a winner, $250 on a loser with a 50% win rate. So that's $250 per trade. Remember, 36 trades get you there. If you had 7 losses in a row, you would only take a $1,750 drawdown. Your max drawdown is $5,000. So you got plenty of room for error. I add a margin of error, and let's call it 10 losses in a row. I'm guessing that you probably would stop trading the system for a day or 2 or 3 if you took that many stops and just get your head right again. But let's give it 10 losses in a row. So that's 2,500 drawdown. That's still 50% of the total drawdown that you need to avoid. So right away, we can see with our system, if we just knew our numbers were this, we could just continue on. But now we have an opportunity to increase the risk without ruining the account. So we can up it to maybe $750 a winner and $350 loser, for example. That's how you adjust the system to hit your targets and to avoid the drawdowns or anything. No, you don't need to code, so don't worry. Doesn't mean you can't code. Feel free to code up a system if you like to, but it's not a requirement. I can code, but and anybody can code, by the way. You can just learn it. It's just learn. But that's not the point here. You don't need to know how to code in order to do a system. A system is simply rules and conditions. If this happens, then do that. That's what an algorithm is. Just if this happens, then do that. So you know exactly when to enter and when to exit. That's really all a system is. You exit at profit target or you exit at your stop loss, and this is where you're getting in at. That's a simple system. That's all it is. So due to the structure of these prop firms and the way that markets work, the ideal systems for prop are mean reversion systems. Okay. Markets only break out and trend 20 to 30% of the time, and they spend 70 to 80% of the time in mean reversion. That means breaking out and coming back in, or going up and down and up and down and up and down in a range. If you look at a chart, you can clearly see big jumps, and they account for 20 to 30% of the time. But after a big jump, it sits there and goes sideways, or it comes back down and goes sideways, goes down and comes back. It's always mean reverting. And that means that we have way more opportunities in mean reversion. We can get a higher win rate in momentum than momentum in mean reversion trades. And you have a very consistent risk reward, because unlike trend and breakout systems, which can go further and last longer than anybody expects, you don't know what your risk reward really is with those systems, whereas a mean reversion is very clearly defined. Now, it's not a magic bullet. Not every trade's going to be a winner. Not every day is going to be a winner. Not every week's a winner. Not every month's going to be a winner. But with a system, think about that. If you had a down month, what would you be doing? You'd probably be changing your trading style, right? With a system, you'll know if you have a down month, if that's normal or not, because you can compare it against it. And that's important when you have drawdowns. There are going to be drawdowns. There will be drawdowns, whether it's an intraday drawdown and you never have a losing day. I don't know. It could be one losing day a week, and suddenly you have 3 or 4 in 1 week, or a whole week, or maybe the whole month is in drawdown. It's different. Okay. I'm not saying that you're not going to have drawdowns, and I'm not saying that they're going to be massive drawdowns. Each system's different. So if you know the historical results of your system, you can know when the drawdown is normal and just part of the job, or, well, and most importantly, you don't run off and try a new system and a new system and a new system and a new system. You can stick with your system, slightly improve it maybe, but you don't need to keep running away to new systems. So let me show you what I mean here. This is about 2,700 trades, a mean reversion system. This has a 50% win rate, average win 1.3 R, and loss is 0.99. So let's say in our example, you would make $500 on a winner and $400 on a loser. Let's just call it that. And over the course of this period of time, so you can see this is on a $150,000 account. Looks like $196,000, 130% over that course of time. So on a $150,000 account, that's $196,000 in profit with only a 2% drawdown. Because it's a bigger account, we don't have to push it so hard. Now, think about the idea of having 20 of these accounts. So instead of $196,000 in profit, now you're looking at $1.9 million in profit. I'm sorry. That would be 10 accounts. 20 accounts would be more like $4 million in profit, right? So that's where the size really comes in. You make 130% on a $5,000 account, you made $6,000, $7,000, right? That's not going to be, that's nice, but you're not going to be able to live off that for too long. So that's why it's really nice to be working with these big prop accounts, multiple accounts. So you're not just moving from a $5,000 account to a $150,000 account. You can have 20 accounts running at the same time. So you're running $3 or $4 million of buying power, and you're 10 to 20xing the results here. But again, this is, look at that equity curve, you see that and you think to yourself, man, this is an amazing system. I'm going to trade it. So, like, I'm all in. Okay. Now the thing is we dial in a little bit. There's these little dips in here, right? See these little dips in here, little bitty dips. They look like nothing. They look so approachable, so easy. But this is what that actually looks like in practice. That's about 2-3 months of trading right there. So maybe a whole month of drawdown. And then so just banging around a little bit, a little down, up and whatever. But eventually it takes off and runs. And if we look at this, you can see we have these drawdown periods, right? We have these small drawdown periods. But what's most notable is these big run-up periods, right? They go. And so with a system like this, you can know that if you're in a drawdown like this, you can know, okay, let me go back and see. Yes, I have had drawdowns in before that are a month long and it sucked, or a month and a half long or whatever, and it sucked, but man, we were off. Like, we just took off running right from there. And so these are, this is the last couple of years. This is just a random sample within there to give you an idea. But let me show you my last quarter. You can see that this was in October here. This is a week or two long period that kind of sucked, but bam, we ripped out of there and we ran, and kind of sideways a little bit, and we ran and sideways a bit. And so in October, that was a 11% return. In November, there's an 8% return, and it was negative. So 0.45% in December. December was also a half month. Like, I only trade like 2 weeks of the month. So didn't really give the system ample opportunity to perform, mostly because it's the holidays and the market's dead. And it's just you and two other friends handing contracts back to each other on the internet that day. Nobody's trading during that period of time. So, but you can see that's clearly within the realm of the drawdown that we saw over here. Definitely that could have been December. I don't know. But it stayed really, real down 0.45%. So barely lost anything. Didn't make anything. I didn't do much that month, but you can see 150 trades in October, made 11%, 134 trades in November, made 8%. And this looks like it's built on a $200,000 account. No, this is 100. This says 200, but that's 150. These are $150,000 accounts. So again, on $150,000 accounts, what, 10 to 15,000 a month on that. Now multiply that by 10 accounts, right? So now you're looking at 150,000 a month. Multiply that by 20 accounts. Now you're looking at $300,000 a month. Now I'm not saying that that's doable every month, and I'm not saying that that's like a guaranteed sort of thing. But with a system, you could adjust accordingly, right? You'll know how much you should be making. And if you're not, is it broken or is it good? And if it's broken, well, then, you should be pretty clear that it's broken. And if it's working fine, it should have some great results. So that's the Curvy trading system. That's the system I trade every day. It's a mean reversion day trading system, works for swing trading as well. I built it to pass prop tryouts and stay funded. There's no other reason for that system. Coincidentally, it works for other things too. So that's kind of the benefit of a system like that, right? Is that it should work. If it works for one thing, it should work for quite a number of things. As a viewer and as a gift for staying with me and working with me, you can get access to Curvy, pollinatetrading.com/Curvy. Use discount code PROP50 for a 50% discount. And if you'd like to trade with us in the trading lab, we trade this system, and prop traders are trying out, and live prop traders are in with us all day, every day. In addition to that, we got family offices, we got hedge funds, we got retail traders in there. Great place to meet other traders, network, and see how other traders are solving the prop trading problems. And unlike a lot of Discord servers or things like that, it is not spam and there's no exploits, and it's a safe space. PollinateTrading.com/lab. That's it for me, guys. Like, subscribe, share, and I'll see you in the next